Well, we're just bringing out the Q4 stats for 2015 and stating the obvious, but the Q4 stats also give us the wrap up for the year for 2015. So in Q4 2015 there was £926 million of transactions done. This was a little bit below what we thought would happen for the quarter because a number of deals which were meant to happen before the 31st of December slid over into 2016. So it's important to put the 4.1 billion done in 2015 into a context. You can see in this chart over a 10-year period, in 2014 the market spiked at 5.9 billion, but the 10-year average is just over £4 billion. Interestingly, the 15-year average is also the same figure at just over 4 billion. So 4.1 billion in 2015 is actually ahead of the 10-year average, but well behind 2014, which was a bumper year. The largest deal done in Q4 2015 was actually the largest deal of the year, which was the sale of Festival Place in Basingstoke by TH Real Estate. This was acquired by AEW for a price of £275.5 million, which is a yield of 6.22. Of the top 10 deals done in 2015, the smallest of the top 10 was £99 million, and that was the sale of the Grafton Centre in Cambridge by M&G to L&G. If you look at these deals in terms of the yields outside London, the yield range is 4.5% to 6.5%, and there's still very good demand out there, and we expect that to continue into 2016. Over the course of 2015, we hardened most yields in our yield groupings between super prime, prime, dominant secondary, secondary and tertiary. I don't expect much movement in the super prime and prime end, as a lot of that yield reflects the scarcity in the UK market. There might be a slight drifting in the tertiary to secondary, caused maybe by the increase in the Fed and the expected increase in base rates in the UK. Also, the uncertainty caused about discussions about Brexit will have an effect, and I see that concentrated in the secondary market.